Hey cousins, happy Mindset Monday and welcome back to the channel. It's your girl Chrissy Pips. Now, in today's video, we will tackle chapter 6 of our book Trading in the Zone by Mark Douglas. Now, this is all about the market's perspective. Today, Mark is going to help us understand what he calls the uncertainty principle and the market's most fundamental characteristic. Now, please don't forget to hit the like button if you enjoy the content in today's video. Comment below and let me know what you think. Subscribe and turn on notifications so you don't miss what's next. And share if you think others can benefit from the information on social media. Now, as always, if you're here, you're interested, so let's get into it. Okay, let's jump back where we left off. Now that we know our perspective is based on the outcome of our last few trades, and the perspective of the more successful trader holds no bias on how they have been doing, we know to look at things as they are and not how we want to or how we have been seeing them. Okay, we need to stay in the now moment, the opportunity flow, and stop bringing our baggage with us to the next setup. So, to add to our success strategy, let's talk about the uncertainty principle. Think of it as a set of pro tips. Remember to trade without fear or overconfidence. Remember to perceive what the market is offering from the market's perspective. Okay? Remember to stay completely focused in the now moment. Leave the past where it's at, behind you, and keep moving forward. Remember to fully believe and understand that anything can happen in the market and you need to be available to receive this information. Remember to utilize your edge. You know, the thing that puts your analysis over the top. Utilize your edge every single time you look for a setup. This set of pro tips will help you become a more successful trader. You'll have a more positive outlook, and this will have a more positive effect on your trading journey as a whole. Now, the best traders' belief in the unknown is so strong that it actually prevents their minds from associating the now moment situation and circumstances with outcomes from prior trades with one another. They can't mix up those two sets of information. By preventing this association, they are able to keep their minds free from unrealistic and rigid expectations about how the market will act and move. Instead of mixing past outcomes with future expectations that lead to both emotional and financial pain, our more successful trading friends have learned to make themselves available to take advantage of whatever opportunities the market has to offer. Now, making yourself available means that you understand that the information you're perceiving is limited based on the information that's being offered to you by the market right now. This keeps you from associating these things that you may have missed in the past that made you lose from what you need to see so that you can move forward and see success in the next trade. Now, we can't see every opportunity that the market has to offer simultaneously, right? But it's even harder to see what's within our scope of vision when we operate from the fear of being wrong. The things that we would normally see seem to disappear when we operate from fear while we're in a trade and don't reappear until we're out of the trade. That's why my mentor says there is no room for emotion in trading. Remember, we are already unable to see opportunities that are right in front of us because we've not learned how to identify them yet. Okay? So let's not keep adding to our blind spots. Making yourself available means you're aware of the known and are also aware of the fact that there are things that are unknowns staring back at you too. Your edge allows you to recognize certain things in the market as indications to buy and sell. This is your known. What you don't know is how what you have identified will show up. Now, since you've made yourself available and are open-minded, you also know that your edge places the odds of winning this trade more in your favor, but you understand that more in your favor and guarantee a win are not the same thing. By making yourself available and staying open-minded, you have consciously made the decision to find out what will happen next instead of thinking you already know what will happen. Staying open-minded means that you're also open to learning something brand new, okay? And being in this state of mind means that you're in the frame of mind that's more open to like entertaining the idea that things that you don't know exist, but you can learn them as they happen. It puts you like at a better risk of like entering the zone, right? When your mind and the market are in sync, you sense that the market is about to do something, and if you and everyone else participating in the market are on the same page, the zone is a mental space where you're doing more than reading the market. You're also in complete harmony with the market as a whole. Does that sound a little odd? Well, this works the same way as a school of fish or a flock of birds all moving in one direction and then like simultaneously changing direction at the same time. Setting up this sync is a little difficult though. Now, you need two things. The first thing is you gotta learn how to stay focused and stay in those now moments. Okay, stay open-minded to what the market is showing you in a non-biased manner. And then the second thing is a little bit harder. It's a little bit more complicated than that, but it deals with the division of labor between your left and right brain. The left side specializes in rational-based thinking, okay? Its rationale is based on what we already know, while the right side specializes in hunches and creative and intuitive impulses, inspiration, and that feeling you get sometimes when you just know something. Now, the rational side will always win unless we train ourselves to accept and trust the creative side. Now, without that training and without that trust between our left and right brain, we will find it very difficult to act on our hunches or our creative and intuitive impulses, or act on our inspiration or our sense of just knowing something sometimes. Acting on anything requires us to have a clear belief and a clear understanding of the intent of something that keeps us focused on the purpose at hand. Now, Mark Douglas says that if the source of our action is creative in nature and our rational mind hasn't been properly trained to trust the source, then at some point in the process of acting on this information, our rational brain will flood our consciousness with conflicting and competing thoughts. Now, all of these thoughts will be sound and reasonable in nature because they will have come from what we already know at a rational level. But they will have the effect of like flipping us out of the zone or any other creative state of mind. There are only a few things in life that are more frustrating than realizing that your creative side was right and then you didn't take advantage of that potential because you talked yourself out of it. If that seems hard to understand, let's talk about how getting our mind and the market in sync means to understand completely and accept the psychological realities of trading, right? Now, most people skip this step, but it's where most of the frustration, disappointment, and misunderstanding and the mysteriousness of the market actually shows up. Now, you need to understand that you need to adapt to the trading lifestyle in order to be successful. Now, because you only need internet access for trading, you can do it from the comforts of your own home. You can do it laying in your bed. And some people don't think that they need to adapt to the trading lifestyle in order to be successful because they've never really left their comfort zone. And just because you understand things about trading doesn't mean that you've accepted and believe everything that comes with trading, okay? Mark says that having an awareness or an understanding of some principle, insight, or concept doesn't necessarily equate to acceptance and belief. When something has been truly accepted, it isn't in conflict with any other component of our mental environment. When we believe in something, we operate out of that belief as a natural function of who we are, without struggling or extra effort. He also says, to whatever degree there is a conflict with any other component of our mental environment, to the same degree there is a lack of acceptance. This isn't difficult to understand why so many people, so few people make it as traders. They just don't do the work to fix this conflict. Now, to get in sync, this conflict must first be resolved. Now, the market's most fundamental characteristic is that it can do virtually anything at any time. Yep, anything, anytime. The problem is that all of us have the tendency to take this characteristic for granted, and this causes us to repeat our errors over and over and over again. If traders really believe that anything can happen at any time, there would be less losers and more consistent winners in the industry. Now, how do we know that virtually anything can happen? Well, all we have to do is dissect the market and look at how the pieces operate individually. The most fundamental component of any market is its traders. Individual traders act as a force on price based on the orders they enter, so buys, sales, and things like that. It's safe to say that all traders' why stems from wanting to make money. Everybody's reason for being traders or wanting to become a trader at the end of the day is exactly the same. Everybody is coming to make money. So no matter what, everyone wants to profit. Most people trade randomly, but we only need to look at the up and down side of things. We don't need to take a deeper dive into how many participants and things like that, just the ups and the downs. Now, the market has no absolute high or absolute low. Keep in mind that one simple order can change a lot as it relates to market movement also. The best traders understand and believe this fact. The best traders also predefine their risk before entering a trade and have the ability to cut their losses without any reservations or hesitation. The best traders also have an organized method of taking profits from trades that are going in their favor. So not predefining risk, not cutting losses when it's not working out, and not systemically taking profits are the three most costly and common errors that traders make. Okay? Now, we can see who has the stronger conviction in the market at any time just by observing what the market is doing right now as it relates to where it was at some previous point. Now, if a recognizable pattern is present, then the pattern may repeat itself, right? That gives us an indication of what the market may be about to do. This is our edge. Our analysis shows us how to identify these patterns. That's the edge that we use as traders. Something we know, right? There are a bunch of unknowns, about as many as there are participants in the market. The best traders don't try to hide from these unknown variables by pretending that they don't exist, or try to intellectualize or rationalize them away through market analysis. The best traders take these variables into account, factoring them into every component of their trading plan. Now, if you don't want to continue down the path of inconsistent frustration, your plan must include a method of predefining your risk, knowing when to cut losses when it's not working out, and you must have a way to systemically take profits throughout profitable setups. We don't know it all. Don't go into the market thinking that you know everything. The market will put you flat on your back. Now, these 3 things are a must in your plan. Don't be the typical trader. We don't want to be those typical people that everybody talks about as far as not being consistent winners. We want to be the exception to those conversations. Mark says that the most effective and functional trading belief that we can acquire is anything can happen. And he said that by establishing a belief that anything can happen, we will be trading and training our minds to think in probability. This is by far the most essential as well as the most difficult principle for people to grasp to effectively integrate into their trading methods or systems of trading. Now, in chapter 7, we will have some work to do, fam, okay? We will cover the trader's edge, thinking in probability, and we did before. It sounds very familiar to, I think, chapter 4 or 5, but it's a little bit different. We're going to dive a little bit deeper into it. We're also going to dive into the probabilities of paradoxes, like it's the random outcome and consistent results section of the book, trading in the moment, managing expectations, and eliminating the emotional risk. Now, I think I'm going to break chapter 7 down into 2 parts because it is a lot of information, but I will publish them both on Monday. So you'll have 2 videos just in case you're taking notes and things like that. It'll make it a little bit easier on you. But that's it for today. Please don't forget to hit the like button if you enjoy the content in this video. Comment below and let me know what you think about this chapter. Okay, subscribe and turn on notifications so you don't miss what's next, and share if you think others can benefit from the info in this video. But as always, I hope you guys are having an awesome and productive day, and I'll see you in the next video.